Good morning, Academy 55. David Kahn here on Friday, the 18th of July, 2025. It's 5 to 8 in the morning here in the UK, and we're looking at the EUR USD on the 1 minute time frame following the adventures of the Academy 5 indicators and strategy. That's all these lines that you can see here. So what is occurring today? What a surprise. We got our old friend consolidation, sideways movement, the crab, whatever you want to call it. It's going sideways. It ain't going anywhere. So let's have a quick delve into what we suspect is happening and what the maybe the future holds for the EUR USD. We'll just have to wait and see. So take the indicators off. And I will go on the daily time frame. This is what we look like on the daily. As you can see, we had imbalance that was tapped into. That is still in balance, but now it's only that portion of the daily candle, because that wick came out and balanced that little bit of the candle up. So that now is in balance on the daily time frame, but that's acres away from where we are. So really, although okay to see, not really important. So, actual fact, I want to take all these lines away. Remove drawings. Yeah, remove all the drawings. Yeah, and start fresh, really. So, here we are. We've got no imbalance up here on the daily. Like I say, we've got that little bit of imbalance there, but that's too far away to sort of talk about. At the moment, as you can see, we are coming down the line. Perhaps if I could draw a trend line from the top there, and it's sort of going like that. But then again, that is acres away from it as well, really. But it's price more than 3 touches, 1, 2, 3, still coming down, possibly into this area here, like we said, but that's a long way away yet. We're only concentrating on what's happening in the next hour. So let's go on to the 4-hourly. There's that trend line. We haven't got no imbalances to sort of trust with ourselves. So let's put it on the line chart on the 4-hourly. This area here is an important area because it's been resistance there. It stayed on that line more or less a long time. So obviously this area here is a good place for the price to rest. So, and this is where price is at the moment. So we'll put it on the hourly. And this is what it looks like on the hourly. So I would suggest this line underneath is the next important line. Yeah, because it's been resistance there and yet support there kind of. So yeah, that's where we are. That's the two zones would be important to look at if price gets to these two zones. So we go back on to candles, go down to the 5-minute. And there's those two lines. Now we've got a bit more context. So now we can draw a horizontal ray, start of the buy zone, horizontal ray on the sell zone. There we go. So that gives us a few clues as to resting places where price likes to turn around, yada, yada, yada. So we put our indicators back on. Like I said, we've had the buy. Price had been in the buy zone, so we would have taken the next buy. And indeed, we can't operate because our next one is a sell. I really like price to get up to here and before selling, but it might not. It might rebound off this one and then go down here. And then this is the scenario we'll be looking at. But we don't care because we only have one or two trades of the day to look at. And because of that, we're not. If price, if it doesn't give us the best possibilities, we come back again later on in the day, maybe even choosing the US 100. Because personally, I am at 9.25% up on the month with my trading endeavors, and it's only the 18th of July. Effectively, I'm only like one trade away from achieving my target for the month. But that doesn't matter. We carry on. We carry on. And after I achieve my target, I carry on in demo and stuff like that. Let's see what's on the news. Dollar set up for weekly gain as firm US data tempers Fed easing bets. So if dollars are set for a gain, you would think the euro would have come down even more. Well, it has been coming down. The bigger picture, at the moment, we can see it going up, but we're only on the 1 minute. But on the daily, as I showed you, it is going down and down. That's because the dollar is gaining strength. If the dollar is gaining strength, the euro loses strength and vice versa. So this is where we are at the moment. If we have a sell, and we're now at 2 minutes past 8. Nice to see so many people on this morning. Hi to you all. Hope you're having a good day. A cloudy start down here in Cornwall. Bit humid as well, but anyway, it's not a weather forecast. So, surprise, surprise, we have to wait. Let's just take the indicator off a minute. Let's see what's happening on the 5 minute. There's our buy zone. Price went into the buy zone. Take the next buy. Up we go. But we have, see, that was an imbalance candle, but that wick there sorted that out. We got a wee bit of imbalance up here, which price might be actually going to sort out as we speak, and indeed it has. So there is no more, maybe possibly a little bit of imbalance there, a wee smidgen. But of course, this candle here now is creating imbalance as it goes, and that needs to be filled. But that's the only imbalance with price coming down to fill for. Everything else has been filled. So it looks like well, at the moment, I would say we are probably heading towards the sell zone or this area here where we're at right now. And then before we have a turnaround. So before we put it back on the minute, put my indicators back on. So before we do anything else, let's go and have a look at how you can set your trade assistant up.
Hi, this is Steve, and in this short video I'm going to just show you the settings for the Trade Assistant to make sure that you've got the minimum 2 pip stop loss on the Euro USD or any currency pair, and how you set it for if you're trading a commodity like the US 100, because the settings are slightly different. So here you can see we're on the Euro USD chart here. I've got my risk to reward on the Trade Assistant locked at 2 to 1. I've got my risk balance at 1%. Lot calculator is on, and my little purple button here between the buy and sell is also activated. So we're ready to bring the Trade Assistant onto the chart. Now you'll notice here that we've got the stop loss set at 20. That indicates 2 pips when you're on a currency pair. And we can actually change that here by typing over it. So if I type in there 40 and just tab off here, you can see now we've got a stop loss of 4 pips because we're on a currency pair. In this example, it's Euro USD, but it could be Euro GBP or any currency pair. So let's just put that back to 20 for our 2 pips. We'll click off here, and now we'll just put the lines on so that you can see that is showing us 2 pips over here on the actual tool, ready to actually get involved with a trade if that's what we were going to do. But that's not what we're here for now. I'm going to click off the lines here, and what we're going to do is we're going to change our chart from Euro USD to US 100, and I can do that by dragging it onto the screen here. You'll see it now switch over to US 100, and now you can see that stop loss says 20, and that's wrong for a commodity. So what we want to do here is come in here and type 2000. This is the equivalent of 2 pips on a commodity such as US 100. So now when I put the lines on, you'll see we've got the number 2000 here, and if I just zoom around, you'll notice the 2 to 1 still applies, 2000 and 4000 here, where we've got a $1,000 trade in place, risking $1,000 to win $2,000. So that's the number that you need to get your 2 pip minimum on. So the minimum number would be 2000. You could have anything above that if you're on a commodity like US 100, and the number will be 20, which is 2 pips equivalent if you're on a currency pair such as Euro USD. Hopefully you found this useful, and thanks very much for watching.
Yes, thanks, Steve. We always find that useful. Okay, so as you can see, we have not missed a thing, but the price has now gone into the sell zone. So we're looking for the next sell, and it gives us a bit more confidence because we are officially looking for on higher. It's gone into the sell zone on the 5-minute, but we're still very much on a buy. But we've created all these imbalances down here, imbalances here. But once it gets down here, yeah, we got a little bit of imbalance down there on these candles here, but might be a slow day. Don't know. Anyway, so that's where we are with the our trading at the moment. So indeed, time to turn on my MC4. Like I say, I like to keep a minimum of 2.2 pips away. That might change, but only higher. So I put in 22 there. That represents 2.2 pips away. Make sure my risk to reward is in purple. My lot calculator is in purple. I've got that all important 1%. Turn my lines on. Oh, that's locked in. I unlock the lock, so it's floating. Trade Assistant is invaluable, really. And obviously I want to reverse conditions. Press R to reverse conditions. So now the stop loss is up there, the entry's down there, take profit at 2% is there. So now I am waiting for a big, nice seller out there. Parallels are above price. Everything to go red, 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 but not at the moment. So we'll come off that at the moment only because it's easier to manipulate the trading view of it than it is of the my MT4 view of it. But we've done all the mapping things out. We knew price, well, sort of respected it a little bit, but only for a little bit. Now here, price might come down to here and then shoot back up again. I wouldn't be surprised because there are a lot of buy orders to make that happen. And so if there's a lot of buy orders to make that happen really quickly, price might get to here to pick up those remaining buy orders and shoot back up again. So I wouldn't be too surprised if that happens. But it is what it is. You can only trade what the market is willing to give you. And like I said before, we only need 1 or 2 trades a day. So if you can't find the best probabilities of what you're looking for at this time, and you're waiting an amount of time for it to happen, you get frustrated. Then you think to yourself, I want this trade, I want a trade to happen. So, you know, there is a big tendency to throw caution to the wind and take a trade that you think may work. But no, you've got to be disciplined and don't do that because you only need 1 or 2 trades a day. Even if you don't have a trade today, because it's Friday, go away, have a really nice weekend, come back Monday afternoon, maybe even Tuesday, and don't fret about it. Don't fear you're missing out on something because you're not. It's always better to upscale. By upscaling, I mean don't increase the amount of trades. You increase the amount of accounts you have because there is software out there. I'm not training you guys often to do that, but there is that will copy your trades onto other accounts, and it would be smarter rather to do that than to increase the amount of trades that you're having. Right, we've got to sell now. So I'm going to go onto my MT4, but I've got to wait for all these to turn red. And they're not turning red yet. So this is where price is now. That's where I want my stop loss. But as you can see, we've still got a green wave. So I've got to wait for these to go red. And it could be coming down just to break into that imbalance there and shoot up again. But we're nowhere near a trade yet anyway, even though we got the sell alert. And indeed, it tapped into this imbalance and it went up again, maybe getting to these imbalances up here. So what, if you felt a bit of panic then, relieve that panic because we're nowhere near a trade yet, even though we got this sell alert. We even might even find a bit of crab-like movement going along. Trend lines, oh no, oh, that was that. I thought the trend line started to go red then, but didn't. Also, an important thing is you guys, just as I'm making this nice and big, arranging it for you guys to see, you should be doing that for yourself as well. Don't have it all scrunched up like that so you can hardly see it. That's ridiculous. Get it to your own satisfaction, nice and a nice, easy to understand picture in front of you. But indeed, if you can understand a bit what price is doing, like it tapped into that imbalance there and now it's shot up again. It may well tap into this imbalance here and then come back down again. We hope it will, but doesn't have to. Price will do what it wants to do. And all trades I take are for educational purposes only, stressing that out again. I trade, so you don't have to, you just watch. But I'm not naive enough to know that people do. But that's their choice, all adults, big boys and girls now. That is down to yourself. So, yeah. So price went into the sell zone. So we got the confirmation taking the next sell, but it ain't come to now to the moment. And indeed, it's going the other way. And if a buy was to again introduce itself, price went up there, I wouldn't be taking the buy either because of that sell zone. Very risky to take a buy trade, so I wouldn't want to be doing that. So if this sell zone don't work and price zooms up there again, well, unfortunately, that's the way it is. I'm only going to be taking sells. And if I can't operate this off this one, just have to wave bye-bye. Price doesn't owe you a trade. Price doesn't owe you nothing. It'll do what it wants to do. And you take advantage of it if you can with the indicators that we've got. But all the news is that the dollar is getting stronger. So therefore, you would think that this wouldn't go up far too much more. But if we go on to the 5-minute time frame, we can see there is another big sell zone up here. So is there more sell orders up here that the greedy little banks and all that would like to get their hands on before we come back down again? Maybe, who knows? Meanwhile, we're at this area here. See, it's sort of rebounded off this this support and resistance line that we drew up earlier on. Sort of respecting that at the moment. But that's okay because by the time price gets down here for our sell trade, if we are going to have one, it's well and truly broken that. So I'm going back on my MT4. And the good news is we haven't lost any money. I've been doing this now since February 2024. So what's it? 18 months? Near, damn it. And so I am quite happy with whatever goes on, sticking to the same things I've always done, because I know that in the long run, unless we have price behaves very, very badly because of nervous actions and lots of news and all that swinging it the wrong ways, I know that in the long run, I'm going to achieve my target, which I've done for many, many months, and get what I want from the market. So a 1% loss here and there is no concern to me whatsoever. And I proved that to you guys. All trades are recorded. The journal, everybody can see the journal, the journey, the journal, whatever you want to call it. Now we've started to get a red volume ribbon now, so that's good. That's the first sign. Activating off this sell. But it's tapping into this imbalance and going whoop. And at the same time going sideways. So it's very cautiously coming back down again. The London guys are looking at the data. Is the dollar really gaining strength like they said it would? I think so. So let's bring the euro down. What have we got? And they'll say, what's going to be happening when New York opens then? Are they going to maintain the strength of the dollar? Are they going to weaken the dollar? What's their best outcome? And depending on that is how far this goes down or goes up or stays the same. This is their thought processes, which obviously we don't know unless you're a mind reader. All we can do is trade what we see and take advantage of their fingerprints of what they're doing. And hopefully, with the indicator, we'll be right. But unless you're Madame Zaza with a big crystal ball, I suggest you just follow what you can see. So this is where we're caught. I mean, prices coming down, tried to try and sort that imbalance there, but again, picking up orders, fooling people who've already put a stop loss. Yeah, and a stop loss is an order. So other poor traders who haven't got the Academy 55 indicators are, so yeah, it's coming down, and they might put their stop loss there, and the banks or whoever is saying, thank you very much, we'll go and take that order, and then we'll go down. Oh, there's some more. Let's go up again. Take that and then go down. And once they've had their fill of that, and there's big enough orders, then yeah, push it all the way down further. But it could go on doing this for a while, taking orders. Not enough. Oh, somebody else has put an order in. We'll go and take that. Come back down again. Oh, there's another order. We'll go and take that. There's another order, and that's how they make their money as well. So they can't really lose, the banks, as you know. But we ain't lost any money because we ain't put no order in yet. And we know what's going on, don't we? But all the time, surely they are coming down all the time. Anticipating that trend line going red at any time. But we're tapping into this imbalance here and going back up again to take some more orders. As retail traders are putting their stop losses in, the banks are making their money off them. Right, this might be. So that's where I want my stop loss there because the wave was just turned red. But as you can see, I'm nowhere near. Ah, right. Okay. So I think I might give it 3 odd pips. Give it a bit of oomph. Right. Oh, I took, see how it goes? 3.8 stop loss. Bit more than I wanted, really, because it takes me beyond the lows down here and the all important purple line, which is the 462 EMA, which is a Fibonacci number. That's 462 of these down here. That's where price wants to. Did I do that too quick? That was reactionary off me. To be fair to me, that could have ended up down there, and that would have been like a 5 pip stop loss, which would have dragged my. So really, I'm paying the price for being a little bit too reactionary there. Even myself, well, didn't panic, but I could see what was going on, and I've seen candles like this go a lot further than that. So I wanted to be in on the action, and the candle could have ended up down there, and I didn't want to miss out on that. So, but in hindsight, did I react too much? Because now I'm an order, and they might come up and say, you know what, we'll take that order, and then we don't not in any rush. We'll take that order and come back down again. I've That's a scenario that I wouldn't be surprised because now it's tapped into this imbalance here. So just like it tapped into that imbalance and played around, took orders, it's playing around with us. The banks are playing around with us, taking our money. And indeed, I think, yeah, indeed, I am out, which is well, yeah, it's a shame, but not a disaster. So this is what happened. 3.8, which is there. That's where I got in. Yeah, that's what's happening really. Because price most of the time happens what history in like history. And you never quite know because price came down. Look, this candle here was in balance. You can all see that. Price came down, took this imbalance, and then fooled retail traders to put their stop losses here, which is an order for a sell. Price think, great. Right, we've got a few orders there. Let's do that again. And it did it again for a stop loss. And then here it said, right, well, we've got that imbalance now. Let's go and tap into this imbalance here and do the same again and make some money off the retail traders. And this time we got caught because I was anticipating the trend line to turn red and it never actually turned red. See that? It's still green. So really, I got caught out by that sharp movement down there. I anticipated, it all went in my mind. Oh, right, 3.8 already. Let's get in. But I got fooled out like everybody else. I admit it, because it tapped into this imbalance here, look, and then took my stop loss, which is an order, and it's just quite happily making money out of retail traders, taking all the orders, going sideways, sideways, sideways. So that's what happened. But because we had a big candle drop down there, I have seen them go way down there, all of a sudden, and then it's too it's gone too far for you to take a trade, you know. But in hindsight, I can see, just explaining to you guys what has happened. And in actual fact, there's more scope for it to do it down there. So it'll it'll come down here again, tap into that, and it could very well trap more retail traders and go up again. And then it could come down to this area down here where there's imbalance and do exactly the same again and trap. It's just a trap. Just a trap. It could be just a trap without actually committing themselves. So, what makes you think Joe Public like me can come along and think, ha ha, I'm gonna sort all this out and I'm gonna get my sell. So that's unfortunate, but so I've been burnt, which is a shame because I was so near. So I'll copy the link and bring my journal in because look at that. I was so close. 9.25. I have a 10% target for the month, but now it's gone back another month, a percent. So again, I pasted in there. So I'm on the EUR USD. I'm trading at 8 till 9 on Friday the 18th. There we go. It was a sell. It lost. I'm on -1 from that, which goes there. So as you can see, that 9.25 has now become 8.25, but that's okay. I'll get my money back. Depending on my lifestyle, I might come back this afternoon. I may not. I'm not really bothered about it because the history of my journal, look, you can go back to February, March, April down here. All the members can get this journal, make it their own, take a copy of it, delete all this information, and then they can have their own journal by doing exactly the same, and they can copy their movements as well. But it's not going to ruin my weekend. That isn't going to ruin my weekend, and I hope it doesn't ruin your weekend either, because it will get our money back. We just basically lent it to them for a little while, and we'll get that back. No problem at all. So with that being said, guys, have yourselves a really, really great weekend. And we'll come back strong again next week. And have yourself a brilliant weekend and a brilliant day. And thank you very much for watching. And we'll see you again. Bye for now.